Good day, Junior Tickies. I'm Mrs. Brimacombe. We are now going to look at Budgets Activity 2. In this activity, we're going to focus on the creditors payment schedule. Before we start with the activity, just to go through some basics. Stock which is sold monthly needs to be replaced, which means that we need to know what the goods cost. In other words, what is the cost of sales? Because whatever we have sold, we need to replace. Now, when we're budgeting, we can buy trading stock, cash, or on credit. When we're buying trading stock cash, that will go into your cash budget. But when we're buying on credit, it means that our creditors, our suppliers, we need to pay them based on the credit terms. And if there are a discount that we can receive for prompt payment, we need to take advantage of that. Based on all of that, we will work out our expected payment to our suppliers. And that expected payment to our suppliers will go into our cash budget. Very important to remember, when we want to know what is the cost of the goods that we've sold, we need to work out the cost of sales using the total sales and not only just the cash sales or credit sales. The total cost of sales will be used to find out what is the stock, how much we need to plan to replace. In Activity 2, you are provided with the information related to choc chip biscuits for the forecast period 1 January 2022 to 31 May 2022. The business sells biscuits which has a shelf life of 1 month. Now, before we look at the questions, we are going to focus now on the workings. If you look at the information, they provided you with the total credit sales. Then they said 60% of sales were on credit and 40% were cash sales. All goods are sold at a markup of 33 1/3% on cost. Credit purchases amounts to 80% of all purchases, and then creditors are paid as follows: 70% in the month of purchase to earn a 2.5% discount, 30% in the following month, and then stock will be replenished monthly. The company aims to keep a fixed base inventory level of 500,000. So where do we start now? I need to know what is the cost of sales. But to get to the cost of sales is calculated on your total sales, and they've provided us with the credit sales. So I'm going to start by filling in what is the total credit sales. Now, just for calculations, for enrichment purpose, if we look at the cash sales, if I want to find out the cash sales, we will take the credit sales times 40 divided by 60. And that equals the cash sales. Now I've got two options. I can calculate the sales by either taking my cash sales plus the credit sales, or we can take the credit sales which was given to us and we say times 100 divided by 60. Remember, when we're calculating our cost of sales, it's calculated on our total sales. So we need to know what is our total sales for each month. Now to calculate the cost of sales, take the selling price times 100 divided by 100 plus the percentage markup. This means 100 plus 33, 1/3, so that is 133,3 recurring. The instruction said round off to the nearest rand. So if I'm calculating this now, make sure that you round it off every single time. So to calculate for January, you had to take sales times 100 divided by 133,3 recurring. The same for February, March, April, and May. Now that we've got the cost of sales, we can work out the cash purchase and the credit purchase. To work out the cash purchase, take the cost of sales times 20%. To work out your credit purchase, you've now got two options. You can take your cost of sales minus the cash purchase, or you can say cost of sales times 80%. It will provide you with exactly the same answer. If we now look at creditors, how we pay our creditors, 70% is in the month of the purchase and 30% in the month following the purchase. So if we've purchased in January, 70% will be paid in the same month so that we can take advantage of 2.5% discount, and 30% will be paid in the second month. Now we can just fill in from February until May, and we can complete the creditor's payment schedule. Question 2.1. Now we're starting with the questions. Complete the table on your answer book to calculate the gross profit from January to May 2022. Calculations must be rounded off to the nearest rand. So if we now look at the workings, we've already done all of that. We had the credit sales. We want to know what is the total sales. This means we could have taken the credit sales times 100 divided by 60. Cost of sales, the markup percentage of 33.13%. So this means we have to take the selling price, which we've done, times 100 divided by 133.3 recurring. So the gross profit equals sales minus cost of sales. And that equals the gross profit for each month. Question 2.2, prepare the creditor's payment schedule. Now we've done the workings. We've calculated the credit purchases for each month. Now the creditor's payment schedule is only from March until May. So we start with the credit purchases. And we're going to start from February. Why do we start from February? Because if I look at January, 70% is in the same month and 30% in the second month of purchase. So this does not fall within our budget period. So this is why January will be excluded. And we're starting from February. So in February, 432,000 times 50% is what we will pay in March. Looking now at March, in the same month, 70% will be paid, but 2.5% discount will be received. Reminder, discount received is a non-cash item. It's an income that will appear in your projected income statement. So this means that the same as with when we did the debtors collection schedule, we first need to work out 70%, and then we're going to say 2.5% is discount, which means then 100 minus 2.5, 97.5% of the total expected payment to our creditors will be paid in that month. From the March purchases, 30% will be paid in April. So just take 450,000 times 30%. The same needs to happen now in April. we first need to work out 70% of the total credit purchases, and then 97.5% is what will be paid to our suppliers. In the second month, 456,000 times 30%. And for May, we need to do exactly the same. First, work out the 70% of the total credit purchases and then times 97.5%. And that is the expected payment to our suppliers. Once we've done that, we can now total what we expect to pay in March, in April, and in May to our suppliers. Question 2.3. If the expected yearly cost of sales is 6.5 million, calculate the number of months of which there is enough stock on hand. Explain whether this is appropriate for the business. So here financial indicators is incorporated into budgets. We need to calculate the stock holding period. To calculate the stock holding period, they said the company aims to keep a fixed-based inventory level of 500,000. So my average stock is beginning plus end divided by 2. So we're going to say 500,000 plus 500,000 times a half divided by 2. And then what is my cost of sales? My expected cost of sales is 6.5 million. That means we're going to times that by 365. So again, if you take 500,000 plus 500,000 divided by 2, it equals 500,000. Divided by the cost of sales times 365 equals 28.1 days. So this is my stock holding period. Now comment if this is appropriate for the business. If we remember, right in the beginning, we've read the instructions or the information, and it says that the business sells biscuits which has a shelf life of 1 month. So based on this, it is appropriate. The period of stock on hand is less than 1 month. So if we look now at the last question, 2.4, there are 3 disadvantages of keeping too much stock. So 1, inventory can become obsolete. It can go out of fashion. Too much working capital into inventory. So these are just some disadvantages if a business keeps too much stock. Thank you very much. So this activity, just a reminder, was just to go through the basics again with regards to the creditors payment schedule. Next, we're going to look at activity 3, where we're going to look at the difference between a projected income statement and a cash budget. We will also move on to where we need to look at actual figures and budgeted figures and compare that. I want to leave you with this quote. Success does not come overnight. It is just a sum of repeated small efforts. Have a wonderful day.